Hi guys, it's Thomas here from COTbase.com. Welcome to your weekly COT review. Today we're going to be looking at the 44th Commitments of Traders Report of 2020. Before I start the review, I just want to let you know that we have a new link over here, your indicators, that will show you the indicators that you've purchased at COT Base. We have, of course, our new indicator, the iCOT, an intraday indicator, and you may also, see what you've already purchased. You can find the download link, some manuals as well, your API key, a lot of great things that will tell you what you purchased at COT Base. So back to the review, and starting off with our first market, which will be the live cattle, with a 19% change in commercials positions. You may see that change size over there on the chart. It's greater than average, nothing too unusual. We had, I believe, a greater change signal last week. Could have been a better one, because you may see the market has shifted higher. So this signal we see right now could be a little bit late for us to act upon. Let's move over to the 5-year chart and see what the extreme situation tells us. And it's quite visible that we are gradually getting closer to bullish extreme levels. If you go back to the very beginning of this 5-year chart to 2015, you may see we had a much greater extreme over there. It just shows you that, there's a potential that this could increase to even greater levels before we see the market acting on that. Nevertheless, we have had a rally throughout the past a couple of months, since April, I should say. We had that bullish extreme over there, and it pushed the market high. We didn't really see a bearish extreme, suggesting this trend can easily continue on in the medium to long term, meaning higher prices for live cattle. Okay, corn will be the next market. We have a 16% change over there. Switching to the 1-year chart, which I advise you to do when you're analyzing changes, we may conclude that we have had greater than average change size in the past couple of weeks, suggesting a move downwards. That's what just happened. This signal could be, once again, a little bit late for acting on. Doesn't mean we can't see the market shifting even lower, but let's just have a look at the 5-year chart and see whether the extreme signal shows a similar direction, and I can conclude that it does. So we have a bearish COT Extreme, meaning commercials almost at 400,000 contracts net short, large speculators more than 400,000 contracts net long, small speculators more or less in between the two extremes they produced on this 5-year chart. No question there's a significant bearish COT signal from the COT Extremes perspective, and you can see from July of 2019, the example I'm showing to you right now, that it's really a successful tool to use on grains. No question about that. So here you go, a few examples. Beautiful example from June of 2016, just at that top. And we also, you can also conclude that we have had a shift in the market. So this could be the top. And if we look at the extreme, it's highly probable that it was. And we have plenty of space left for the market to decrease in value, and that's something the extreme suggests will happen. The next market will be the wheat, to be specific, not the Chicago, but the Minneapolis wheat. And of course, still sticking to the COT change analysis, we have a 13% change over there in commercials positions, a little bit smaller than the one we had last week. And you can see that was a more successful signal, pushing the market lower. Who knows if this signal suggests we can see lower prices, and of course we can, but let's have a look at the COT Extreme, and you can conclude that once again we are witnessing a bearish extreme, and it's comparable to the ones that I'm showing to you from February of 2017 or July of 2017. That was actually a beautiful example of an extreme COT signal, which was successful. So we are getting closer to those levels, meaning in the medium to long term, traders are expecting a shift in the trend. So that might be coming, maybe not now, but in a few weeks' time. Moving on to large speculator COT extreme signals, we have soybeans on top of our list with an all-time extreme. And that's not only the case for large speculators, but also commercials too. So That's something you should keep in mind. Huge signal over there. Definitely not something we see quite often. It can, of course, I always say, and for anybody who's new to COT analysis, let me just tell you that all-time COT extremes mean that for the history, since CFTC is publishing reports on that specific market, which we can actually check if you, and basically here you can see that we go back to the 1980s and we've never seen such an extreme in the past. You can see that quite visibly on the chart. So that's what all-time COT extremes. Basically, we can state that neither commercials or large speculators have had such net long, net short extremes positionings in the past, the whole history. So that's a pretty strong signal, but you should keep in mind that these signals, these all-time COT extreme signals, could be present in the market for many weeks or even months before the market actually reacts. Okay, the next market we're going to look at is sugar, with a 210 report extreme in large speculators, 209 in commercials. So no question that this extreme is huge, but it's also a good example how much we need to wait for an extreme to really take its effect on the market. So it's quite hard to pinpoint when the shift is going to happen, but nevertheless, it's good to know that stress levels are building up, and you may see that we have had a bit of a decline already in sugar the past couple of days. And last but not least, let's have a look at corn. Corn, or actually let's open the New Zealand dollar, okay? So here we have 123 report extreme in large speculators. Of course, it's quite visible very fast that we've seen much greater extremes. So that's why it's important to always look at the COT charts as well, because you can always compare the extreme to a previous one. So it's large. I should say larger than the one we saw in January, which was a good bearish extreme pushing the market lower. And it is bearish, but just there's caution to be made, because if you look at the examples I'm showing to you from, let's say, 2017 July, there's space left for the extreme to even widen to those levels. Okay, that was all for this review. Of course, don't forget that these are very brief reviews looking at a few markets. You could always go and look at all the markets that are available. You can look at new COT report types, other data types, analyze specific data sets that you want. And of course, don't forget, we have a lot of new products out. This intraday ICOT indicator, which could be very useful. And I hope you will give it a try one day. So I appreciate your attention. Thank you very much for being with me. I wish you a great weekend. Take care. Goodbye.